Hello, I'm Susanne Allen, National President and CEO of the U.S. Pan-Asian American Chamber of Commerce Education Foundation, calling you from the nation's capital, Washington, D.C. It has been a while that I speak to you through LiveTALK, so today is a special day for me. I'm dressed up for it. And we have a special topic today called the ERTC to share with our audience. Young, old, new, and fairly new. It is called the Employee Retention Tax Credit, in short, ERTC. And joining me today are two tax specialists from the IRS. They can tell you all about the ERTC, how Americans' employers could benefit from it. It's a true benefit given through the IRS. Joining me today is Yong Li, a bilingual stakeholder liaison tax specialist, and Susanne Guo, senior stakeholder liaison and bilingual tax specialist, both from the IRS.
Hello, and this is Yong Li, and today I'm here with my colleague Susanne Guo, and we are from the IRS Communication and Liaison Department, and we are one of those less known departments within the IRS, and comparing to the exam department or the collection department. But we are here to explain some American tax credits that are available to American taxpayers.
Hi, this is Susanne Guo, a stakeholder liaison. My colleague Young and I here today and to deliver some key message to all the business taxpayers regarding the employee retention tax credits.
And get to the real topic. How can any business taxpayer determine whether he or she qualifies to apply for this employee retention tax credits? Who wants to take this question?
So I'll take that question. So first of all, let me repeat that the credit is called ERTC. It stands for Employee Retention Credit. But although the name says employee, but the credit is for the employers. So in order to qualify that, first of all, you got to have a business and you got to be the business owner with employees, and that you keep paying your employees during the pandemic in 2020 and 2021. And then on top of that, there are a couple other criteria that you need to meet. So we're going to be briefly talking about all these criteria. And the first one was that your business need to sustain a full or partial suspension of operation during the COVID pandemic because of a governmental order that limits commerce, travel, or group gatherings. So, and second of the criteria is that your business had a significant decline in gross receipt in 2020. And what that means is that your gross receipt dropped by more than 50% compared to the same calendar quarter in 2019. That's what we mean significant decline. And the third one is that you have to have a decline in gross receipt in the first 3 quarters of 2021. What that means is that if you compare that gross receipt in 2021 to your 2019 gross receipt, and you drop and you have a more than 20% decline, you would generally be qualified for this credit. And also, if for the 4th quarter, and you may be qualified if you are what we call a recovery startup business. What that means is that your business, you start business on after February 15 of 2020. That's what we call a recovery business, and you're trying to re-up the business. So those are the general criteria in order to qualify.
Wow, sounds fairly complicated, Young and Susanne. Let's get to the benefits first. How does this ERTC benefit the employers? What are the benefits? Why should they go through this complicated process?
The process is maybe a little bit complicated, and then there are some record keepings that the business owner need to be doing, but the benefits are pretty substantial. And the business owners may be able to obtain credits to offset or even lower their certain of employment taxes that they are required to pay or deposit. And also, if there is any excess after the offset, they may be able to receive actual credit or actual money in the pocket. So in terms of the amount of the credit, it's kind of depends on the amount of qualified wages that's being paid. So just give you an example. So say for tax year 2020, the credit is going to be equal to 50% of the qualified wages, up to $10,000 per employee. So let's say if you pay your employees $8,000 in wages, you could be able to receive up to $4,000 in credits. But there's a cap of that. And that's a $10,000 wages per employee per year. That's per year. So even if you pay, let's say, $50,000 in wages, then you're still going to be kept at $5,000 in credits. But for 2021, that's much more. The credit is much more generous percent of the qualified wages, of up to $10,000 per quarter instead of per year. Now for 2021, it's per quarter. So if let's say you pay your employee John Doe $10,000 of wages per quarter, that's roughly speaking a little over $3,000 a month. Then you could be eligible for up to $28,000 of credit. That's 70% of $10,000 per quarter times 4 quarters. So that's going to come out to be total of $28,000 in credit. So that's much more generous than the 2020 tax credits.
Susanne, let's get to the documents first before we go to the calculation. What type of documents are needed in order to claim this tax credit, and how can a business owner who had employees during those involved years and had kept them on the payroll make sure that they have everything they need in order to support that claim?
Yes, of course. The business owners, they need to keep records of any governmental orders that cause them to suspend the operations. Any documentation showing the significant decline in their gross receipts, employee wages, copies of employment tax returns, and PPP loan status. These records should be kept for at least 4 years after the tax became due or is paid, whichever is later. So this ensures that they have everything they need and is available for IRS review. So for example, significant declines of gross receipt, that your tax return will show the comparison, how much decline of your gross receipt between the time periods. And also employment tax return will showing how much qualified wages that you pay to your employees.
So some may make mistakes, some make little mistakes, big mistakes, medium-sized mistakes. What are the potential risks or consequences of claiming the tax credit improperly or incorrectly? Yong?
Yes, and we all make mistakes, and some are bigger mistakes, some are smaller mistakes, but if we discover the mistakes, we need to correct those mistakes. And taxpayers are always responsible for whatever the information that they have on their tax returns. So if they are improperly claiming that credit, and that may result in the taxpayer being required to repay the credits along with possible penalties plus interests. So also that the IRS is also actively auditing and conducting any investigations relating to any false claims. So we ask that if the employers or taxpayers who file an improper claims or make any mistakes or discover any errors or omissions, they should file an amended tax return to correct that related debt.
You know, I remember hearing from the radio advertisement about this by individual or entities calling on them to seek help to prepare for this ERTC application. And there may be impulses of folks who are not expert in this, not in the business of helping to apply for tax credits and other benefits. What are the warning signs that the American business taxpayers should watch out for to avoid the promoters who aggressively mislead people and businesses that are not eligible into believing that they can claim these credits, and sometimes even ask them for a little money upfront to apply for benefits that the employers are clearly not eligible for? Susanne?
There are promoters out there who know the victims who promise of tax saving that sometimes too good to be true. So business owners should be aware those people to offer you a tax saving plan, but they ask for an upfront fee and claiming of determine eligibility for the ERC credits within minutes. So they suggest the business owner to claim it because there's nothing to lose. So these promoters often send fake letters from non-existent government departments to obtain personal and financial information to steal identities. So business owners need to be aware and avoid making any hasty decisions for this claiming this credit.
Thank you. That's very important. Not only you pay some upfront money as a deposit for imposters, or they actually utilize that benefit to lure you into giving them your very private and confidential information, such as your full name, your business address, your personal address, your social security number, your date of birth, and employer tax ID number. Those are very important information that I think many of you will want to keep private and confidential and only entrusted to your trusted advisors or folks who, like your CPA or your tax attorney, for that particular purpose. Young, the ERTC, does it relate to any other economic relief programs that the current administration has put out into the economy to help American small business?
Yes, there are a couple of relief programs that kind of interrelated or have an impact on the ERTCs. And one of them, being the most common one, is what we call the Paycheck Protection Program, or the PPP loans. And back during the pandemics, small and medium-sized business may obtain what we call a PPP loan that can provide funds for them for their payroll costs. And that's kind of including the healthcare and retirement benefits. And a lot of those PPP loans may be able to qualify for full for forgiveness when certain requirements are satisfied. In order to qualify for the ERTCs, that same wages that business owner used to apply for PPP loan forgiveness, you can not qualify for ERTCs. So in other words, that there's no double dipping. You cannot claim the same wages on PPP loan forgiveness and the ERTCs. And also that there is, generally speaking, that for those business owners can deduct or can write off or any wages expenses as a business expenses on their tax returns. So if they get EITCs, and the wage deduction claim on that business return will be reduced by the amount of the EITC that they are getting from the. So those are the most common ones that we see.
Thank you. And in terms of people who prepare you for the application, there are those who ask for the money up front. There are those who ask for it after the application has been filed, and even before you receive the tax credit or the tax refund, or those who wait until you actually get the benefit. And you may want to consider any of the three options that is most beneficial to you, because you are the taxpayer, and once you get paid, and you can then pay those who actually help you achieve that goal. Thank you very much for that answer. What is the deadline for filing for the tax credit? Either Yong or Susanne, is there a deadline or it goes on forever?
So the business owners, generally speaking, they have 3 years from the date that they file their Form 941 employment tax return, or 2 years from the date they pay the taxes. So whichever is later. So to claim this ERC, they should file their Form 941 by the last day of the month that follow the end of the quarter. For example, if the quarter ends on March 31st, so they should file Form 941 by April 30th. So this way they can be sure they have everything that they need and submit it in time. So generally speaking, 3 years.
Thank you. Well, you have been so helpful answering some of the important questions that America's business employers should take note of and pay attention to, whether they want to apply for the tax credit, tax employer retention. Is that employee? Did you say that?
Employee retention credit.
Employee retention credit, tax credit refund, or not. So before we say goodbye to the audience, are there any final thoughts that you want to share with the audience, Yong and Susanne?
We want to stress one more time that this credit lifeline to millions of business during the difficult times, and if your business had a fully or partially suspended operation due to government order, or if your gross receipt declined more than 10% in 2020, or if your gross receipt declined by more than 20% in 2021, you would generally be qualified for the credit. But we want to emphasize that each case is different. So we ask that you please work it with your reputable tax professionals, and provide him or her with the specifics on your specific case to make that decision, and calculate the amount of credits that you can claim. So don't fall victim of any don't fall victim of just believing that a blanket statement that you are qualified, or fall victim of any file that.
Great. Susanne?
Yes. So as Yang mentioned, and I have a little bit additional summary of what we just said. So keep in mind, as a business owner, you need to always keep records, keep documentations to substantiate that your business has been any governmental order to suspend of your operation during the pandemic time frame, and also books and records to showing that you have significant decline in your gross income, how much you pay for your employee, and the employment tax return, and also if you get any PPP loan during the time. So also need to be aware the promoters out there. Don't trust those people tell you too good to be true. And additionally, so the deadline to file the ERTC is within the 3 years of your Form 941 file, or 2 years from the date of your paying the taxes. So which is later. So
Right. And as a definition for some of the audience here, Form 941 is, as I remember, the employer's quarterly tax return. Am I correct, Susanne?
yes,
Yong
that's
Li?
the employer quarterly tax return.
And that's when they report on the payroll they pay to the employees every quarterly. And
Exactly.
that's the IRS Form 941. Well, that's it for today's session. I want to thank Yong Li and Susanne Wolf, Bilingual Stakeholder Liaison Tax Specialist from the Internal Revenue Service. Thank you for joining us. Bye for now.